And there's more bad news for people looking to buy a house as mortgage rates in the U.S. have climbed for a sixth straight week. According to Freddie Mac, the average 30-year fixed mortgage is now 6.7%, the highest rate since July of 2007. The rate has gone up a full percentage point since the start of this month and up almost 4% from exactly a year ago. High rates, along with low inventory, have put homes out of reach for many prospective buyers. Jessica Lautz joins us now with more. She's the Vice President of Demographics and Behavioral Insights at the National Association of Realtors. Jessica, this has bluntly been the worst week in the financial markets since March of 2020. What kind of impact are you seeing on home sales?
Right. We have seen that for 7 straight months, home sales are down and home buyers are now active in the market and they're facing incredibly high rates. It's eroding affordability for home buyers who are out there today. For someone who's shopping for a home today, it means a payment that's nearly $850 more per month than just in January.
Wow, that's such a big increase. So which buyers are most affected by these interest rate hikes?
So certainly your first-time home buyers out there today are going to be impacted. They don't have that housing equity to rely on like others do. Those homeowners in the last couple of years have made incredible gains. And so they have that wealth to be able to move from another home, though they may have separation anxiety from their current mortgage and not want to make that move. But for first-time home buyers, they don't have that to rely on.
What about minority groups, buyers of color? Are they also hit really hard here?
Absolutely. For minority buyers, they're less likely to have a generational transfer of wealth that would propel them into homeownership and perhaps lower that down payment, which would in turn make a lower mortgage payment per month. But unfortunately, they are less likely to have that to rely on. And so that's going to hit minority buyers even more than your typical first-time home buyer out there.
Our reporting reveals that there are scenarios where people thought they had, fixed the rate, but then when they go to close a few weeks later, the rates are actually higher. So what's your advice?
My advice for buyers out there today is to be in close contact with their mortgage lender to make sure that you keep that conversation open and make sure that what you are shopping for today is the same as what it was just a couple days ago. We know that rates are an ever-changing environment and they could, in fact, go closer to 7%. Buyers need to be aware, make sure that they have their shopping list of what they can't sacrifice on, but perhaps something else to give, like the location or even the size or condition of the home.
As the valuations drop, are we looking at a 2008 scenario where some folks got underwater really quickly on their mortgages?
So I would say for that answer, this is the good thing. We know that homeowners have this equity that they've gained. We also know that lending is incredibly tight. It's hard to obtain a mortgage today. And so it's very unlikely we're going to be in that scenario. Right now, we actually see only 1% of members, realtors, are working with a distressed seller in the last month. If we look at that years ago, we can see that it was actually as high as 49% during 2009.
Such a big difference.
So a much different environment.
Huge difference.
Yeah.
So Jessica, what advice do you have for first-time buyers, who've already waited so long to get on the ownership ladder?
I would say for first-time home buyers, we know that this is going to impact your monthly payment once you're into a home. But I would say on the good side, for those who have an FHA loan, a VA loan, perhaps because it's a less competitive buying market, you may have an opportunity. If you have that higher income, you may be able to actually lock in a ratified contract at this point.
And just a final point, for some context, you just have to go back a generation, and it was routine for people to see mortgage rates of 16, 17, 18, even 19%. So we've gotten very comfortable and sort of used to this climate of sort of easy, free money, right?
Sure, we all have short memories when it comes to looking at mortgage rates, and 2%, 3% was a beautiful rate over the last couple of years, but it wasn't there to stay. The other thing, too, is once you're in a home, you can refi that mortgage if rates drop. You don't have to be married to that loan, but you can marry that house.
You don't have to be married to your loan. I like that. Jessica Lautz, thank you very much.
Thank you.